Let's check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick. So maybe you could break down for us, what is the process for getting an ETF approved at the SEC, and why is it more likely that we might see one happen as soon as Monday?
Good morning. So, yeah, this actually whole thing began months and months ago when some of these wannabe issuers filed their first forms with the SEC saying, we think that the market can support a Bitcoin exchange traded fund. We have an exchange partner such as CBOE BZX or NYSE ARCA, and we believe that we could offer a safe regulated product. And the SEC has been reviewing, I think at this point they're up to around 40 different proposals for both spot market based future ETFs and futures based ETFs. And it's not just for Bitcoin at this point. There are applications for Ether and Ether futures. And I think just this week there was an application for some kind of NFT related ETF. So the paperwork happened, began months ago. SEC has been reviewing. And under current law, what has to happen is the SEC commissioners and the staff have to meet and say, we think this is safe. We are not going to oppose it. So there's no official approval here. What happens is after a certain period of time, the SEC can choose to either reject or, ask for more questions or delay a proposal. But if they do nothing, then the proposal automatically becomes effective. And it seems like that is going to be what's happening here. We have heard that the SEC staff and commissioners are inclined to allow certain futures-based ETFs to go effective next week. And this could begin, the deadline we're looking at is Monday. Presumably it might take a little bit of time for these products to actually launch. So, I wouldn't expect to see any products begin trading on Monday, but what we might hear is, a company might come out and say, hey, the SEC has not opposed our application. We're going to, we've been deemed effective. We will launch soon. And that's really kind of what we're looking out for at this point.
So, Nick, it wouldn't be just one, right? I think we talked about this earlier, that it would be more than one just so that the SEC wouldn't show favoritism. Is that correct? And if so, which ones are more likely to happen?
Yeah, so the SEC isn't obligated to, give multiple ones the green light. And because of the process I just described, if a company applied even, a day before another company, then that company will probably go effective more, sooner than the other one. But what it looks like will happen is the SEC is probably going to, give a couple entities, maybe two or three, the, tacit green light and say, we have no problem with this, do your thing. And so far, the ones that Bloomberg named were ProShares and Invesco, and I think we're looking at a couple others, such as Valkyrie, that have also filed within roughly the same time period. And those are kind of the names we're looking out for. The other thing the SEC might do, and absolutely no guarantees here, is they might look at some of the companies that filed, day, 2 days, 3 days later, and say, we think that your product is similar to this other thing that's going effective. We are okay with you, being deemed effective a little bit early so that they do launch simultaneously. I have no idea if this is actually going to happen, or, what the specific process there is, but that is another possibility that's been floated to me, to ensure that there is no, one single winner that's taking up all of the volume, all of the, fund inflow, and, make sure that it's a competitive product.
Nick, just zooming out for a moment, how significant is this? I mean, people in the crypto community have been talking about an ETF forever. Of course, this is a very specific kind of ETF, but just basically, like, how big a deal is this? Or is this just something that was just a matter of time?
I think it was, so to some degree, it definitely was just a matter of time, but it still seems like a milestone of sorts. I remember back in 2018, we were following ETF applications, and at the time, the argument was because of the way an ETF trades, meaning you can buy shares through, for example, your TD Ameritrade app or another retail popular stock market app. The idea was you could buy shares of an ETF and gain exposure to Bitcoin very easily. All you'd have to do is, log into your app, buy a couple shares, boom, you're done. I feel like that argument is not as strong these days because now Cash App and Venmo, for example, allow you to buy Bitcoin directly. So if you're looking for that easy on ramp, then you do have alternatives. But what a Bitcoin futures ETF still does provide, or will provide rather, is the opportunity to buy into something that is regulated by a federal agency and has pretty strict oversight and compliance requirements. So if you're buying an ETF, it's not because you are interested in Bitcoin per se. It's because you're intrigued by it and you want exposure, but you're not 100% confident in buying it through an exchange or directly because of whatever issues, whether that's cybersecurity concerns, whether that's just volatility concerns, or just the fact that exchanges tend to go down every time there's a lot of market activity. That's maybe why you'd want to buy into an ETF. So from that point of view, it's significant because it is a huge expansion of, or theoretical expansion of, the possible market for Bitcoin.